Melvin says, I really thought Trump would have done more with the SEC. Maybe it's yet to come. Don't forget, Melvin, that Donald Trump has already put in place Paul Atkins, who prior to the 2008 collapse was part of the SEC and established a massive framework to allow the stoppage of naked shorting and short selling. However, he left 3 months before the collapse in the great financial crisis, and his successors, all the way through Gary Gensler from 2008 through today, did absolutely nothing to make any real tangible change in the stock market. Dodd-Frank regulations were an absolute joke. They still allow the Bernie Madoff exception, which allows the market maker an exemption, Rule 203B III, in order to legally naked short stocks in the name of liquidity to facilitate a trade. So the reality is that Donald Trump's been in office not even 2 weeks at this point, and he's done a massively good job already in putting the right people in place. A lot of people are going to be disappointed in this, but I'm actually kind of happy about it. Hester Pierce, of all people, also known as Crypto Mom, was put in place as the head of crypto regulation for the Securities Exchange Commission. And this is a good sign because she's not in charge of the greater markets overall, like which Paul Atkins is, because he's the new commissioner, soon to be voted in, I should say, right? Soon to be appointed as the new commissioner. So Hester Pierce regulating crypto is a good sound. Sounds really good overall, including the fact that the FDIC has already set to revise guidelines to allow banks to engage in crypto activities, which is extremely bullish for cryptocurrencies and markets all around. And the other good news is that Paul Atkins was a major vocal supporter of short selling transparency and eliminating the ability for naked shorts to illegally manipulate markets. So this is, of course, a good thing for everybody. John, welcome to the channel, my friend. This is good news for everybody who is invested in things like precious metals and heavily shorted equities, because it means that there will be less market manipulation under Paul Atkins. So what we're seeing here, let me zoom in a little bit on this for you guys so you could see what's going on. FINRA has admitted that Apex Clearing Corporation has been fined for lending your shares of stock to short sellers without your permission. They have been fined for not paying you properly, and they have been fined for not advising that your lent shares are ineligible for SIPC protection. And as usual, holders of AMC and GameStop were correct and continue to be correct. Surprise, surprise. As you can see here, FINRA has fined Apex Clearing Corporation a measly $3.2 million for violations related to its fully paid securities lending program. This is the first time that FINRA has ever charged a firm with violating Rule 4330, which establishes permissible use of customers' securities. Does not care in the slightest bit what happens to your shares, and is more than happy to work with their partner firms, the hedge funds and family offices, to lend out your shares without your permission. This is the first time in history that FINRA has ever charged a firm with violating this FINRA rule. You want to know what else is happening for the first time? A stock and crypto brokerage that is not going to be using Apex clearing houses nor routing your orders automatically to dark pools like the current brokerages. All of them are doing this. Robinhood, Webull, IBKR, Schwab, Fidelity, etc. all route your orders to the highest bidder. And usually that's market making dark pools like Citadel and Virtue. For the first time in history, an upcoming stock and crypto brokerage is offering you the opportunity to own equity shares in the company and receive a ton of perks and benefits before launch and before IPO. And of course, when the company IPOs, you then have the opportunity to sell your shares for a liquidity event. This has never been offered in the history of the world. And thanks to the Jobs Act of 2012 and Regulation CF exemption, we are able to allow retail investors to do this. So the link's in the description and in the side right there. Strategic Works asks, so will there be any compensation to shareholders with legal action? Do shareholders even have legal standings to go after Apex Clearing? I believe they do, my friend. And they're offering a measly $1 million in restitution to harmed customers for supervisory and advertising violations related to the program. But it was Apex that entered into lending agreements with customers and borrowed customer securities. These matters originated from a FINRA examination of firms offering fully paid securities lending to retail customers. The reality of the fact is that there may be a class action lawsuit here at hand against Apex Clearing Corporation for having done this. And if that were to materialize, I believe along with many other retail investors, millions of people, would be privy to joining this lawsuit. But again, this is directly from FINRA, and FINRA has admitted and publicly released the information just yesterday that Apex Clearing basically stole from you. They took shares that you own and lent them out without your permission. And they're a broker to a lot of companies. Let me tell you which brokerages. There are many, many brokerages. But here, somebody asked me, and I went ahead and pulled the data. Let me see, it's down here somewhere in these comments. And I will show you which brokerages. One of the popular ones is Webull. Webull Securities, of course, which I used to use as a brokerage and I don't anymore, was lending out shares of stock. Oh, sorry, I should say, let me refrain from saying that. Webull wasn't doing it. Apex was doing it. And they're the clearinghouse for Webull. Now, thankfully, here at Lit Exchange, we are definitely not going to be using Apex Clearing as our clearinghouse. So here, Apex Clearing Corporation serves as the clearing and custody provider for numerous brokerage firms, right? And amongst which brokerage firms? Trade Zero America, Stash, Ally Invest, Betterment, Webull Financial, SoFi, M1 Finance, Tastyworks, eToro, First Trade, Tradier Brokerage, Stockpile, Trade Zero, Cash App, Bumped Financial, Alpaca Securities, Apex Crypto. These partnerships enable these brokerages to offer efficient trading experiences, blah, blah, blah. The reality of the fact is that when you deal with a company like Apex Clearinghouse, you don't know what you're going to get. They're a major firm associated with some of the very controversial firms. For example, Webull and eToro and Schwab and IBKR were amongst those firms that removed retail investors' ability to buy shares of stock, AMC, GameStop, and up to 50 other securities on January 28th of 21. And now let's go ahead and read these. Now that we know some of these firms, they also act as a clearinghouse for many other firms, not just these. But these are some of the notable brokerages that utilize Apex Clearing. First enforcement action charging violations of FINRA Rule 4330. FINRA has fined Apex Clearing $3.2 million for violations related to its fully paid securities lending program. Apex operated a fully paid securities lending program for introducing firms, which in turn offered their customers the opportunity to participate. This means that they were lending out your shares without your permission through their share borrowing program. FINRA previously ordered 4 introducing firms whose customers participated in Apex program to pay a combined $2.6 million, including over $1 million in restitution to harmed customers. Who were these firms? M1 Finance. Let me scoot this over for you. M1 Finance, Open to the Public Investing, SoFi, and Sogo Trade. They paid a combined $2.6 million, including over $1 million in restitution to retail customers enrolled in fully paid securities lending programs related to these violations. These firms, okay, in case you're unaware, the borrowing program is a lending practice through which a clearing firm, Apex, borrows a customer's fully paid or excess margin securities and lends them to a third party in exchange for a daily borrowing fee. If a customer chooses to enroll in a fully paid lending program, the clearing firm determines which securities to borrow, when, and at what terms. The daily borrowing fee that the clearing firm collects is generally shared among the clearing firm, the broker-dealer, and the customer who owns the borrowed security. When shares are borrowed over a dividend date, instead of dividend payments, customer receives payments in lieu of dividends, which typically are subject to a higher tax rate than qualified dividends. And of course, they didn't advise you this. You didn't know because it wasn't in the terms of service. So you didn't know that when you were borrowing out these, even though you signed up for it, that instead of dividend payments, you were receiving payments in lieu of dividends, subject to a much higher tax rate than those dividends themselves. So you see here, although each firm agreed in contracts with the clearing firm to determine which of its customers were appropriate for participation, the firms did not establish any criteria for customer participation or take any steps to make appropriateness determinations prior to enrolling their customers in fully paid securities lending. Instead, they enrolled all new customers in fully paid securities lending at account opening. The firms also provided customers with disclosures that contained misrepresentations, also known as lies, that customers would receive compensation for the lending of their securities, including in the form of a loan fee. In fact, the customers did not receive any compensation. Now, you see here, that is what the broker-dealers did. But now, what did Apex Clearinghouse do? Well, my friends, Apex Clearing, it was much, much worse. It was Apex that entered into the lending agreements with the customers and borrowed customer securities. Member firms must have a reasonable grounds to believe that a fully paid securities lending program is appropriate for customers who participate. It is unreasonable to expect a customer to take on risks and the potential financial consequences of securities lending with no financial upside, said Bill St. Louis, Executive Vice President and Head of Enforcement at FINRA. In addition to obtaining restitution for harmed investors from the introducing firms, we must hold accountable the clearing firm that designated, facilitated, and benefited from this program. Fully paid securities lending is a practice, I already told you guys that, through which they borrow your securities. Any security that you have that is on margin is being lent out. Any security that you sign up for this, or any security that you own, period, when you sign up for this borrowing program, is up for borrowing. And the clearinghouse is the one who determines this. Those risks include potentially higher taxation for payments received in lieu of dividends, and the loss of Securities Investor Protection Corporation protection on the securities for the duration of the loan, and loss of voting rights. You lose your voting rights because the borrower gets those voting rights, right? You lose the SIPC protection. So if the brokerage or any of these firms, the clearinghouse, the brokerage, the hedge fund that is borrowing the shares, the market maker that's borrowing the shares or using them as share locates, the family office, whatever, goes bankrupt, becomes insolvent, has massive losses, you don't get a fucking dime. $0, 0 cents in SIPC protection. So even if your firm, SoFi, M1 Finance, Webull, you name it, has SIPC protection, if your shares are being lent out, you don't get that protection, ladies and gentlemen. And FINRA Rule 4330 requires member firms that borrow customer securities to have reasonable grounds to believe that the loans are appropriate for the customers and to provide customers with notices and disclosures in writing. Apex failed on all of those counts. It lacked reasonable grounds to think the program was appropriate for participating customers who did not receive a loan fee. Not only were your shares borrowed out and you didn't have any SIPC protection and you didn't have voting rights and you paid a higher tax rate, you did not receive a loan fee. You received lies in your documentation. stating that you would receive document compensation, which you did not, of course. You didn't receive a fucking penny from them. And they failed to provide certain customers with written disclosures entirely. And they did this when? Drum roll, please. From 2019 through 2023, Apex entered into securities loans with certain introduced customers without having reasonable grounds to believe that the loans were appropriate for those customers, because those customers did not receive a loan fee for lending their shares. In addition, Apex also violated FINRA Rules 2210, 3110, and 2010. From 2021 through 2023, the firm failed to provide many customers enrolled in their fully paid securities lending program with all the written disclosures, with rights respect to the loan securities and the risks and financial impacts associated. And then, from 2019 through 2023, Apex distributed to certain of its broker-dealers documents that were sent to more than 5 million retail investors containing lies about the compensation that those investors would receive under the fully paid securities lending program. 4 of those broker-dealers enrolled approximately 5 million investors, approximately 17% of which had securities borrowed by Apex. Finally, since 2019, Apex failed to maintain, establish, and enforce supervisory system, written procedures, blah, blah, blah. You got it, folks? This is something that it continues to happen time and time again from these firms. And now you have FINRA not only going after the firms that are actually committing these violations, but even the clearinghouse that is helping them commit these violations. Ladies and gentlemen, they borrowed your shares of stock without your permission. They lied to you about getting paid. They lied to you about how much taxes you were going to get paid. They lied to you about the fact that your shares weren't eligible for SIPC protection. You know the way your bank has FDIC protection for money in the bank account up to a certain amount? That's what the SIPC does. But when your shares are being lent out, either because your shares are held in a margin account, your shares are being lent out without your permission, or actually they do have your permission, because when you have a margin account, you cannot turn off share lending. And if you sign up for the share lending, they claimed that you were getting paid, and of course you did not get paid. So they lied to you about the benefits. They lied to you about the downfalls. And the fact of the matter is that they manipulated stock markets and lent out your shares to shorts that they shouldn't have been able to lend out. Ladies and gentlemen, this is one of many reasons why we are creating a new stock and crypto brokerage. We have been working on this company since September of 2021, and we are on the verge of launching in the very near future. As of right now, you have the opportunity, for the first time in the history of the world, no other upcoming brokerage has offered this ever. And we are giving you the chance to become an owner in Lit Exchange, a stock and crypto brokerage for retail by retail investors. Unlike traditional brokerages, we prioritize creating fairness and transparency in financial markets. Lit will automatically route your orders to Lit Markets, which actively prevents and deters manipulation of your trades that occur every single day via payment for order flow. We will not be using Apex Clearinghouse as our clearinghouse, because you can see the kinds of things that they continue to do, the violations that they have been doing. Not to mention, Lit Exchange will enable you to harness the power of AI and swarm intelligence combined. You can achieve a level of swarm intelligence between our platform, the AI, social media, and thousands of your new best friends within our think tanks in Lit Exchange to analyze information and strategize in ways that are currently impossible. The artificial intelligence within Lit Exchange that we are using a third-party AI will crawl the web and scrape it for the newest up and latest data, analyze it, check it for accuracy, and feed it into the think tanks for you to disseminate with thousands, if not tens of thousands, of your new best friends, all interested in that particular stock, so that you can make better decisions with the help of a hive mind swarm intelligence. This has never been seen before. This level of collaboration will allow for incredibly fast and accurate dissemination of information for you to complete your due diligence, charting, technical analysis, fundamental analysis, etc., in a streamlined manner. But of course, our main goal is to protect your trades and equities from market manipulation by avoiding payment for order flow from price distorting dark pools, where your equities are greatly suppressed, trades are internalized, and smart money front runs your trades and sells you synthetic shares, often failing to deliver, creating FTDs and putting stocks on the threshold securities list. This is a once in a lifetime opportunity. From litexchange.com, you can see a direct link to our SEC filings on the SEC Edgar website. You can see a link to the FINRA regulated funding portal called Silicon Prairie, at which point on siliconprairie.com, you will then be able to invest in the company and receive equity and a significant number of perks and benefits as well. Of course, there are risks involved in any investment, so go ahead and read through all of the audited financials, the pitch deck, the business plan, the offering memorandum, everything, all of the disclosures offered to you there so that you can make an informed decision. But we are literally reinventing stock brokerage as the first viable competitor to smart money brokerages. So there you can get all of the information you need directly from the business plan, the offerings, the pitch deck, and so on to give you all of the details that you need. Black Widow says, I'm investing more in LitExchange. I'm sick of this nonsense. And we are sick of this nonsense as well, my friend. Hence the creation of the upcoming brokerage, LitExchange. Hence these SEC Edgar filings. Hence the ability for the first time in the history of the world, we are not going to hedge funds to get money like other firms have done, like all the other firms have done, instead of giving the opportunity to retail. We are giving retail the opportunity first and foremost, ladies and gentlemen. So far, over 300 retail investors have invested over $500,000 in LitExchange. This has been done 100% organically. And if you are watching this video right now, you are one of the few people in the world that actually knows about it. Pretty soon, we're going to start advertising this across all forms of social media, radio, print, television, etc. And the rest of the world will find out about it, at which point we will easily reach our stretch goal and final goals here with LitExchange. Then you will be able to use it in the very near future. Again, when we IPO in the next couple of years, you will have the opportunity to sell your shares of stock on the stock market for what we believe to be a potential significant liquidity event. So that being the case, go ahead and check out litexchange.com. There's a link down in the description, over in the chat as well. DropTF, yes, LitExchange will have a mobile app. Peter says, I already am an investor in LitExchange, and you cannot wait for it to go live. Cheers, my friend. We've been working on it very heavily with our engineering team, our AI machine learning team. The back end and the front end are coming along swimmingly. Ape Famous, we have not yet announced a winner for the LitExchange ad contest just yet. Britt asks, how long before we can transfer in shares? Just an estimate. My friend, we hope to launch here at the end of 2025 or at the beginning of 2026 at the latest, pending no major issues with FINRA. However, our legal securities attorneys team is at the ready and has everything prepared to file all of our final applications. The only thing we need is a little bit more retail participation in the Founders Program in order to have sufficient liquidity to have the application be accepted by FINRA and meet all of their regulations, of course, which we have been working very hard to do. But again, we've been doing it for over the last 3 years, and this is not just some regular application. This is not some website. There are a lot of hoops and regulations that we have to make sure we adhere to because this company is here to stay. This is the first ever retail brokerage created for retail investors by retail investors. And as somebody with over 20 years experience in business and with decades of experience in brokerage of multiple kinds, this is right in my wheelhouse. I've brokered real estate, I've brokered freight shipments and logistics, and now it is time for us to broker stock and crypto actual sales, because It is very easy to facilitate these trades. It is not easy to avoid the payment for order flow from these price distorting dark pools.
To be clear, I do not respect the SEC.
We made the decision in the morning to limit the buying of about 13 securities on our platform. So we're really in unprecedented times. In order to protect the firm, we had to limit buying.
That markets are efficient because of active managers setting the prices of securities. Firms like Citadel, we're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued.
Sam Bankman-Fried and FTX, he's been charged by US courts and the SEC with money laundering, conspiracy to commit wire fraud, and securities fraud for the collapse of FTX. The former chairman of NASDAQ, Bernie Madoff, built the largest Ponzi scheme in history. Over 4 decades, he faked records of annual gains to investors who thought he was investing their funds, when in fact, he was just using new investor capital to pay off older investors.
But the synthetic shorting and naked shorting, which is illegal, market maker can execute naked shorts insofar as they're facilitating a trade. The regulators are looking at that now as to whether or not there was this naked shorting by the market makers on behalf of the hedge funds in order to facilitate the shorts. And I think they're going to uncover that there were some issues there. But the penalty for naked shorting is really not significant enough to stop it. Citadel and Goldman and all of the players get fined constantly for doing this.
Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources.
I basically would like to ask the SEC why they didn't act on the morning of January 28th, because I was so scared. I can't tell you how scared I was. I was so scared. I can't tell you how scared I was.
Well, Thomas, what were you scared about? What does failure look like? You said we came close to breaking. What were you scared of?
I was scared of a domino bankruptcy. I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to $480, and then suddenly it didn't go further, but it could have gone further.
So buying and selling those 200 shares would make the market maker $1. But as millions of shares are traded, the profits from the spread add up. In 2020, these brokerages collected almost $2.6 billion in payments for stock and option orders.
These brokers, including Interactive Brokers and Robinhood, that generate revenue from selling the order flow to market makers.
Business has always been done like this on Wall Street for over 100 years.
Our orders compete against each other to get the best prices. But if the order instead is routed to a wholesaler that has agreed to pay for it, the order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.
As you mentioned about commission or zero commission does not mean it's free. It does have some cost inside. Some brokers have payment for order flow.
Disclosure alone, by enhancing the disclosure around payment for order flow, really will address it. United Kingdom, Canada, Australia, all have banned payment for order flow. I know we have different markets, different systems. We even have letters that we've gotten over the years, dating back over the last 20 years, articulating why it's not good for our system. So I really ask staff to consider that, but also to consider it only in the context of the entire market structure.
On January 28th, our daily deposit requirement was 10 times more than on January 25th. As a result, Robinhood Securities imposed temporary trading restrictions on certain securities. Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements.
The decision to restrict trading really was internal to Robinhood. We did not have discussions about that.
Like GameStop, AMC, all these meme stocks have brought naked short selling really to the forefront of the market's interest. This is something that's going on for a very long time in the small cap market and is very much a problem.
Has your husband ever made a stock purchase or sale based on information he received from you?
No, absolutely not. Okay.
Thank you.
Thank you.
Those are fully collateralized tokens.
The markets are efficient because of active managers setting the prices of securities.
The order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.